Hello, Owen here, and this evening we're going to talk about emergency tax basis, and this of course is for the Irish taxation system, and we're covering the year 2013, which is the current year as I speak anyway. Now we should know this, that there are two rates of tax in the Irish system: 20% tax, which is the standard rate, and the higher rate of tax, which is 41%. Now there are two scenarios for emergency taxation. One is the employee may not even provide a PPS number, and PPS number is a personal public service number. Now it would be rare that a person wouldn't have one of those. Maybe if they're new into the country they may not have one. So the thing about that is then if they don't have one of those, the taxation system is going to tax them fairly harshly. And what that is that a cut-off point tells you how much you can earn paying at the standard rate of tax before you go on to the higher rate of tax at 41%. So if the employee does not provide you with a PPS number, what is going to happen in that case is that all his or her income is going to be taxed at 41%. And as well as that, he or she won't have any tax credit. So that will be the amount of tax they would pay, their income multiplied by 41%. Now also on everyone on emergency tax, their USC or universal social charge, all of it, their income is charged at 7%. No cut-off points are allowed. Now the second scenario is where an employee would have a PPS number but doesn't have either a certificate of tax credit and standard rate cut-off from the tax inspector, or a tax deduction card, or copies of a certificate made by a former employer. So in that case the way he's treated is a little bit more leniently than if they have no PPS number. What happens is that for the first 8 weeks they're given a cut-off point of 631, which is that of a single person, 631, and for weeks 1 to 4 and week 1 to 8. So what that essentially says is that up to 631 earnings they'll be charged at 20%, and anything in excess of 631 euros per week they'll be charged at 41%. And this, you should remember, this is not done on a cumulative basis as well. That is just that allowed per week. Now when you calculate their tax then, weeks 1 to 4 they are given the personal tax credit of a single person, rounded up to the nearest euro, and that's 32 euros. So having calculated their income tax, they will be, you can take 32 euros off that, the tax credit. Now weeks 5 to 8, as we said, they will still have the cut-off point of 631, but you'll notice here that they don't have any tax credit. So their income calculated for 631 at 20%, and anything above 631 will be taxed at 41%, and they won't have any tax credits there. And then if it goes from beyond that, like they're given 8 weeks to get their tax in order, if you like, and after that they will not have any standard rate cut-off point. So in other words, all their income is going to be charged at 41%, and they're not going to have any tax credits. As we said earlier, all the income for anyone on emergency tax, their USC is charged at 7%. Now hopefully that's of some use. Now I will produce another video showing some actual deductions. Thank you. Bye now.